Hey traders, what's going on? Jamie Saettele here. It is 1 o'clock in New York City. This is the SB Trade Desk Midweek Strategy Webinar for October 26th. And before I get started, let me know that you can hear me. Let me know that you can see the charts. Okay, seems like everything's working fine. So I'm just going to get started. Dollar yen is something I'm focusing intently and intensely on at the moment. As you know, indicated last night's post, we had this kind of this late day. Well, it was not really late day sell-off. The sell-off was around, I guess, noon, New York time, but we're at a pretty big level. Remember, the long-term stuff is suggesting that dollar yen has actually, found what could be a really big basing area, and we have been going sideways since Brexit. So certainly risk that you do pop through here, but dangerous to be buying into resistance. We'll look at the short-term picture though here in a bit, and some of the other yen crosses, and then also look at gold. Maybe that'll help us kind of lean one way or the other on whether or not you can break through this resistance. The measurements that I was talking about here are, remember, 2 equal legs up, right? 104.90, pretty much spot on so far as where the high is, right? 104.90. And then also where the rally from the Brexit low, okay, equals 0.618 of the rally from the low back in August, okay? And that's 104.82. So you've got this really big, Fibonacci confluence, right really at the highs. Okay, now if we go to the short-term picture, this is the one of the charts from last night. Certainly, one more high looks not just possible but likely. So what I would be doing trade-wise now that we've held up for a day, right? Because when you get a day like yesterday where you come off resistance really hard, it's kind of tough to just jump in and say you're going to buy that right then and there, because you don't know if you're going to stabilize. We have stabilized, okay, and 104.25, 104.30, kind of an area to look at for, support now. Reason being, a few reasons here, but that's the close here yesterday, okay, on that really high volume declining bar, okay, right at 104.25. So you've got that there. You've also, if you scroll back, you've got the shorter term parallel, which again was resistance back here, back in September, okay, several times in September. So 104.25 is kind of an area I think that would be actually, a smart move to buy into that level for a run at a new high. And if there's a surprise move, back up to 105.50 or even 105.80, then so be it. Okay, 105.50, 105.80, if you recall, right? This is 105.54 right here. That's the low from May. Really big spot. October 2014 low, 105.19. January 2014 high, 105.43. So we've got a ton of stuff here. And then, of course, this big move higher right here in this week, Halloween of 2 years ago, that was BOJ. So, you do have BOJ next week. when they have done surprising things, it has been in October. This was also BOJ right here, the low, way back here in 2011. So, if there's going to be a big shocker, I guess it could come next week. So with that, understanding, it might not be a terrible idea to get in on the long side here at 104.25 on a dip back to support. All right. Let's look at some other yen crosses as well. I really am not gonna. I don't have much to say about Aussie, CAD, or Kiwi. I mean, the levels are there. The levels I've been looking at for, especially for Kiwi, 71.91 and 70.94. But the market is more or less stationary when it comes to these, commodity currencies at the moment. So I'm not going to go over it. There's just nothing to look at with these currencies. Gold might hold the key, right? I'm wondering if gold holds the key. It's very difficult for me to think that after you get this type of move, that's the low. Okay, typically you get consolidation. They call it, a dead cat bounce or something, and then the market heads lower for another leg, at least one more leg lower. And, I thought that on the 20th, so last Thursday, I guess, I thought that might have been it for gold. It was not. We ripped yesterday, and then here we have erased the entire rally. Okay, so we're, failing right near where you would expect the market to fail, right? This high, this former high. And then you've got essentially what, is proposed former channel support. Now, this was never support, okay, but the line extending off of the former low, you're failing in the right area. Okay, so I think we finally might have, the ability to scoot lower fairly quickly and get into that final low, maybe fairly close to the 12-11 area or so. I say 12-11 because that's the 50% retracement of the rally from the low back in December of 2015. Okay, so we're getting pretty close to, I think, finally getting a resolution from this bounce that's lasted for most of October. Low is on 10.7. Okay, if we look at the hourly chart, it takes the form of a wedge here, it seems, right? Kind of draw that in. So you could essentially, we're kind of testing the wedge support now, actually. So it's a pretty big deal on the very short-term charts. And why look at gold and yen? Well, the two are pretty correlated. Again, I think I've showed this a number of times. But if we take a look at the short-term yen and gold chart as well as the long-term, they both look pretty similar. All right, so here we go. So here's yen in gold, yen in red, gold in gold. And you're looking at daily charts, and this is yen futures, right? So you can see if gold starts to break down, yen probably going to go with it, as it often does. If we look at even a shorter term chart, hourly chart, you can see the two, generally speaking, the pretty big moves do tend to happen together. You get some divergences at the turns, but that gold chart, I think, really speaks to me as far as saying that the move's not over yet. So I'm looking at not just dollar yen, but some of these yen crosses are looking awfully interesting. Euro yen, pound yen being the two most interesting. So euro yen, we've been following this for a while. We did get the low down at, right on 112.60 last week, and that was just the trend line. If I go out to a 4-hour chart, right, that was just the trend line and the low back here from 9:30. So, we kind of nicked that low, turned up, and here we are now breaking the short-term, trend line resistance. So, the goal here was to get entry on this down near, at 113.10 or 11 today. We turned up during Asia last night. Low is 113.26, which I think was about the 50% retracement. Still looking higher here. Again, 114.55 would be where two equal legs are from the low. Talked about the daily chart, in which you kind of have a lot of, pivots since Brexit between 114.40 and, this is the chart from last night, between 114.40 and 114.80 or so. Here's that chart, right? So you can see that 114.50 to 114.80, right? And then just, a lot there as far as retracements, and then two equal legs as well. So looking up into that area, okay, into 14.55. So as it stands now, trading it, I would just want to be buying it into pretty much the monthly open price, which is 13.65, and it, it intersects with, see how I guess this plays out the rest of the day, but it intersects with this towards the end of the US day today and into Asian trading, tomorrow. Okay, so looking for basically a pullback here. There is a pitchfork that you can draw. I have it here. You don't want to draw it up here because that's clearly off of a spike. But you can see this is the 25% line and the 75% line, right? 25 was support last night. 75 is where you are right now, and kind of reacting to it. And then the 100, the upper parallel, would actually be up where, your proposed measurements are in the 1450s. Okay. So, basically it's just kind of looking to buy a dip here in euro yen. Same idea, obviously, with dollar yen, right? As if it comes down into, 104.25 is the area that we were thinking about. Okay, so there's euro yen. Bigger picture euro yen, again, it's basing at this long-term support. I do think it probably tries to react in the 114.50s area or so. I probably wouldn't want to keep it much beyond there, to be quite honest. Pound yen has been really nice on the short-term slope. Again, we've been publishing these charts a little bit throughout the Twitter stream and whatnot, but you can pardon all the circles and everything, but you can see this slope acting, really well as support, on the way down, right? And then we broke through it. This is just earlier this week. We broke through the median line, found resistance, came back, and we basically had support come in, right, around where the median line was, which, had been resistance, right, on the way down. And guess where we just traded to and turned off of? The upper parallel. Here we are, right? So we're turning down right now. Now, again, what this tells me with all these higher highs here, okay, is that you could be building the base for a bigger move to the upside. So I would be looking at getting in on this as well. Pound yen. Pound yen can pull back into, again, watch 104.25 in dollar yen, but with pound yen, I'd probably just be watching for support, probably closer to 127.30s, right? You get the high right here from 2 days ago, 127.21 actually. On the daily chart, it looks fairly clean as well. this is that really long-term trend line, and essentially you're looking for maybe a run up into that level, and then to see what it does there as the big test takes hold, right? So right up in here, 130, 130.70 is the month open, actually intersects with that trend line, okay, and you can kind of see the up move, basing, and then maybe one more move higher. So pound yen could be very interesting on the long side. As you can see, this is the trend line we've been looking at, testing that resistance level. Right, we're looking on the short-term chart, so you've come into it right now. So pound yen and euro yen looking interesting for kind of pops on the upside, maybe after coming in a little bit. Other than that, gold, we looked at gold. Aussie yen has come into some major resistance. Remember the trend line all the way back. This is going all the way back to 2014, right? 200-day average. You've got the slope line, slightly higher, right? It's up near 80.45 or so, 80.40 over the next couple of days. So you've got some major, some major resistance up here, okay, to contend with Aussie yen, okay. And that kind of brings me to the next chart, which is Aussie yen coming into resistance, while euro yen and pound yen look like they might actually be fairly constructive, especially euro yen. With the measurements up at 114.55, and granted this is very short term, but we kind of have to work pretty short term here because the market's not really offering much to do here. Everything being, the range is so extremely tight right now. But that brings me to the next chart, which is Aussie yen. So, tweeted this out this morning, but Aussie yen, we're about to put in another reversal bar on the day. Okay, barring a late day decline. But guess what? This trend line parallel to the line off of the 2015, 2016 highs, parallel off of the 2014 high, here crosses all these levels right here as well. Okay, I mean, just nailed it to the tick today. So what this sets up for potentially is a move higher in euro Aussie, back up into essentially the neckline from this head and shoulders. Okay, so that takes you back up into maybe 44.80, and then you can go lower again. So euro Aussie is telling a nice story, and that you might get kind of a surprise move higher. So this is I think an idea that I like very much, is being long euro Aussie up into 44.80. And if you look at the short-term chart for euro Aussie, it's clearly unfolding as an impulse, right? 1, 2, 3, little dip here, 4, new high 5. Look where we just came into. It's the weekly opening price right here, 142.91, right? So I like euro Aussie on the upside, over the next couple of days up into 44.80. See, what's euro dollar doing? Pay attention to euro right here, folks. We are coming into support. If you are trading right now or wishing to trade or whatever, I'm looking for support in euro basically right around here, between 108.80, which is the weekly open, and 109 or so, which 109.04 was the high from yesterday. 10.25 high, European high, is right here. Okay, And then you do have a median line here. This is obviously really, really short term. So why don't we do that next? Why don't we look at and go to the when we go to the chart of euro, kind of go over the special report that I looked at. Okay, so here's the euro report from the weekend, and as you can see, this is the 2002 picture. Now, this is, I guess, still possible, but the way the market's declined, it's a lot like gold, right? Like the way the market's declined of late, it makes me kind of not think that the low is necessarily in place yet. Typically, you don't get, and not always, but typically, the final lows in a move are typically not the really extreme movements. Okay, and you obviously have some pretty good downside momentum with euro of late. So what I'm looking at here is for us to get maybe a move back into the median line at 109.75. 109.77 is the high volume level from ECB last week. And then it can make its merry way down to the channel area. Okay, and after that, we can be looking at potentially trading, for some sort of a low or a bigger low. All right, so, with that report, there were several things to take away from it. One being that you have these comparisons, and the only times that you've had October markets come back and test their year open in euro is actually now, 2011, right? You made that low on 10/4, which was a Tuesday. 2004, which is the opposite situation. The market went through the, through the year open in October, found a high on the 26th, which was a Tuesday, pulled back for 3 days, and then consolidated and continued higher. All right, and then 2000. Oh, that was it. Okay, so the point in both of them is you get a pretty good reaction initially. Okay, you get a pretty good reaction in the October pivot, whether being near the year open like 2011, or whether being in the timing date 25th, 26th, right? And then the other option being that you could reverse see a much larger reversal. Well, either way, it doesn't really matter if you're looking to kind of trade the next move, because the next move suggests for both of them that you're going to go higher. So in this case, I'm looking at taking it higher into 109.77. Okay, I hope that makes sense. And again, the volume level, as I talked about, the ECB level right here, right there it is. So if we can get up into there, you actually have the short opportunity. So willing to take euro long and then take euro short. So euro long up into maybe 109.77. Look, turn it around and take it short from that point. And after that, you can see maybe we can get a real big kind of sentiment low, if you will, all the way down into 107.75. The channels down here 107.75. Yearly low, year-to-date low is 107.10. That would be a level that we can get to by November as far as the channel is concerned, right? So that is my thought on euro. But, other than that, the next few things I would probably be wanting to trade are just these yen crosses, euro yen, pound yen, maybe Aussie yen on the short side, right? But the channel's a little higher, 80.50, and euro Aussie on the long side, which obviously would, kind of help hedge out any of that Aussie long exposure, because this thing is continues to act pretty terrible. Aussie dollar, I mean, every time it rallies, it just gets smoked back on the downside, right? Here we are last night, right back up at 77 at resistance, failed again. The importance of waiting for a daily close, even a weekly close, and a consolidation as long as you've had with Aussie dollar. I mean, this is one powerful potential, that's for sure, right? But it's, it continues to get held back. Let's look at crude oil, because crude is actually one of the charts which is fairly clean at the moment. So we got that big rip off of 49, which we kind of warned about. 49, the big rip. You had it. It was right on what's on the inventories number today, and here we've retraced the entire thing. I didn't even realize it was already completely retraced as I started the webinar. So yep, here we are. We got up to $50. Thought maybe you try to go up into the former supports, up 50-20, 50-30, 50-50 or so. But the algos decided that they were just going to take crude oil down right away. So if you break here, it's pretty nasty, pretty dangerous. Crude could get obliterated until probably about 46 bucks. Okay. And there's a natural fork that you could probably draw in here. And this one's you draw off a spike right here. Not the best. Anyway, this is something that you might want to follow. So I prefer just leave it at this. But yeah, you're pressing the issue on a break here for crude oil. So crude oil still support. $49 is still support. Okay, would be looking for $46. So that's a pretty big drop. We were up at 51 and change, almost 52. 52 to 49. So, essentially you're looking at an equal amount from here to here as here to here. And if you look at the daily chart, really would not be all that, all that much of a surprise to come back into 46.20. It's the trend line back from the February lows. Okay. It's also former trend line resistance. Okay, line off of the June high and the August high, and you might end up getting there in October. There's a nice time symmetry there too. June, 2 months later, 2 months later. So be watching that closely. Now, it's not to say that crude can't trade around here for a little bit, sideways or above 49 bucks. 49 is a pretty big deal. I mean, that was the August high itself. You do have this good slope here that cuts through, a number of highs and lows. You can see it probably easier on the, say, a 240-minute chart, right, or even an hourly chart. You can see it here. You can see it here. I've been trading at it for really the last 2 days, right? Or not the last 2 days, but the last 3, 4-hour bars. So into Europe this morning and the U.S. session today. So, that if we're going to get a breakdown in crude, what does that say for, what does that say for dollar CAD? Well, if you're going to $49 in crude, I would be hard pressed to say that dollar CAD is going to hold these highs, right? Here's dollar CAD, the crude number this morning. You really didn't see that much of a reaction in dollar CAD either, did you? So if we continue to trade sideways in crude for a day or so, maybe you get back into 32.80 or so, 33, not 32.80, sorry, but 33 and change, which you got the former highs up here, right? Or the high here was 32.12. That was today's low, was 33.13. So you did come into this level. Okay, so dollar CAD might be about to press higher still. Maybe 138 actually is what we thought earlier in the year. Maybe that's back in play. It's that would be an awfully big spot to get to. The next level to pay attention to in this chart is going to be 34.56. That's the high from September 2015 right here. Okay. So if you're looking at trading maybe some crude oil, I'd be looking at 34.56 as a kind of a take profit area, or sorry, for dollar CAD. What about the S&P 500, you ask? I mean, trading hell, right? Very little movement, very compressed. So much uncertainty. And typically, you hear they say markets don't like uncertainty, yet the market hasn't declined, also hasn't rallied. So, I don't even, the daily charts to me at this point are worthless. I'm kind of looking at still this stuff here, the bigger picture charts. The S&P index on monthly, weekly basis. Okay. I mean, here's the monthly basis. This is the long-term parallel. We are still above it. Okay. We are still above it. And there's still the possibility that you do get one more high, okay, before you just crash. We talked about this how many webinars ago? Probably 2 or 3 at this point, and here we are back at the exact same spot. But again, from the lows this year in February, 1, 2, 3, 4, one more high in 5, right? Certainly possible. Continue to hold up. I mean, it does seem as though there's a lot of negativity out there, and the market just won't budge. It's kind of the worst of the worst for bulls and bears. It's a market that just won't move, right? And here's the count. It's pretty clean. The count on say like a weekly chart, right? 3, 4. This is bigger 3, right? And then 1, 2, 3, 4, 5. Now, if we don't get that final high, then maybe maybe all of this is a triangle or something, or even a flat pattern. Certainly, in the grand scheme of things, if you're looking at being a bull here, you're kind of picking up pennies in front of a steamroller on the equity markets. But I'm looking at this more from trying to figure out if there's going to be the opportunity for the next few weeks or so to be kind of a risk-on trade, right? Because if you have a risk-on trade, then you're probably going to see yen crosses actually do pretty well, better than I thought. But hey, let the chips fall where they may. For me, the next move I think is probably a couple things. Dollar yen into 104.25, 104.30. Look to take it higher from there. Tight stops below here, 104. Euro dollar maybe around 108.80, 109. We're kind of already at 109 right now, 109.04. Pound yen, we'll be looking to see if we can break through this resistance level and then maybe take it up back into, if not 130.70, at least the former lows in this congestion area at 129.50, right? Acting pretty well the way it's found support. So I want to dip back into here, look for support. And Euro Yen, naturally, same thing. Even a cleaner setup, in my opinion. If you get a pullback into here, 113.70 or 65, the trend line that was broken, that should be the level that you watch for support at this point to take it higher into 114.55, right? And Aussie Yen, you might want to fade a rally up there into 80.50. And Euro Aussie, we'll be looking to buy it. Given the long-term support hold, given this beautiful 5-wave structure on the upside, failing at the week open, one more high, pull back, and get long. You can see it here, 1, 2, 3, 4, 5. Pull back A, B, C. Take it higher, take it higher. So that is my story. I don't really have much else to give or to offer at this point in time today. Wouldn't this be nice if this played out? Even if this entire, structure played out. If you got up to 144.80, maybe get yourself a flat pattern here. A, B, C. Okay, that's B, C. I'll write all this out in the update later on tonight. But setting up for interesting trades on both sides of the market is Euro Aussie. Give me some other charts to go through. Let's do this for fun, because that's really all I've got myself as far as the stuff that I probably want to trade and write about right now. But why don't you guys, if you have anything that you want to look at, and it doesn't even have to be a currency, right? We could look at commodity. We could look at really anything you want. So let me know if there's something that you'd like to look at. If there is, we'll take a look at it. I'm getting nothing. No questions, nothing at all. Let's look at some exotics. Okay, Matthew says, how about Kiwi? All right, so there you go. So Kiwi. All right. Well, Kiwi, we'll look at it. Let's do this. Let's take this down from, we'll go kind of big picture down to small, right? So I've thought for a long time that Kiwi could just kind of collapse. And if you look at it in this way, all right, so way back, you've got this whole structure, weekly chart, okay, channel all the way up here that we topped at back in 2014, right? You had a double top there. That double top target is actually 59. It was never met. Now, that's on an arithmetic scale, okay, but still, it was never met. Well, fast forward to the rally from last August, and we have what appears to be a wedge, right? It's a wedge pattern, okay? Now, fast forward even more, and you've got what appears to be, and you can see it easier if I make it, say, a line chart. I can't really see it there. You have probably look at a daily chart. Okay. you've got here what might be the early stages of a head and shoulders, right? You got these peaks over here, head here, coming into a peak here, perhaps, I don't know. But even if that's what's going on, I'm thinking that you probably have another leg higher here. One, because the former peak over here is higher, 73. So let's now look at our nice clean daily chart. Okay, so here it is. Here's the daily chart. Let's go 240 minutes. So remember, we already decided that there's this huge bearish potential topping thing, but even if we were going to be topping, it might not necessarily be until we get all the way back up into 73 or so. Okay, so if we're looking at it from that standpoint, and you're looking at this short-term chart, 240-minute chart from, 10, 13 lows, 1, 2, 3, 4, 5 impulsive rally, this decline probably, can be classified either way. It's really, doesn't fit the bill as either one, in my opinion. Okay, tells me that you're going to make another high back above 72.65, which was last week's high. Okay, because you're looking for A, B, C, something like that. Now, that said, you could still trade up here or down here. Okay, so that's why I've said range. What you want to do is trade range on Kiwi, but at the specific levels. So if I'm looking to trade, take a short position, say on Kiwi dollar into 71.91, I'm going to make sure that I get out if we get down into 71 or so, because that's where there's support, because that's actually where I'd like to be long, because 71, I want to take it up into 73 at that point, and then you might actually have the opportunity to get really big and bearish on Kiwi. Okay, because that is where you would be looking for maybe a proposed right shoulder high. Now, usually I would not go this, so-called like forecasting a pattern itself, right? That's never a good thing to do. But in this case, we have such a developed wedge over the last year plus, from August of last year, okay, that the possibility is too big to ignore. So that's all. So that's what I'm looking at with Kiwi, is kind of 3 levels that I'd want to trade over the next number of, days or weeks, and that's 71.91, 70.94, and then eventually maybe up above or near 73. Okay. Dollar Swiss, we have a question on from Wesley. You got it, my friend. Let's take a look at Dollar Swiss. Dollar Swiss here, we've got So Dollar Swiss is still pressing this big resistance, but here's the thing with Dollar Swiss. Let's draw it out. Okay, let's draw it out from a, first you need to go, we're going like really long term, we're going to look at a log chart. And sometimes these longer term levels are actually will work out even better than, say, if you're trying to get short term. All right, so we're going to go all the way back to the 1985 high. Okay. $19.85 high, and then we're going to look at the off the low. All right. And we need to look at semi-log chart, OER. Okay, we need to make this so that it's a trend line. Okay. So here's where we are. You can see this 50 line, right? Now, because you can't draw parallels with okay, so what we've got, trying to get this drawn, I just want to show you how it gets drawn here. All right, here we go. Okay, so here's the dollar Swiss, okay, all the way back 1985 forward. Now this line, these lines, the slope of this angle has actually been very precise, and when it's been, you know, resistance and whatnot. So the one that, you know, extends, you know, off of the high from back in November of 2015, you can see it's back here too in 2001, and that's really the level that I'm going to pay attention to. Okay, the big level, and it looks to be up around, you know, you could go a little higher, right? Because, you know, you want to extend it maybe off of, give a little more room. Okay, so it would probably be somewhere around, you know, 100, call it 100.35 to 100.65 or so over the next couple of weeks. And that really, to me, is the last barrier for, you know, for dollar Swiss on the upside. Now, if you're looking at this, right, if you're looking at this on, say, you know, a daily chart, right, and you're looking at it without historical perspective, you're going to say, well, we're breaking out. And yeah, on this chart, we are breaking out if you're looking back to November. But once you get up into 100, you know, 40, 100.65 or so, I'd be really careful, because at that point, I do think the market could fail at a much bigger and much more important resistance level. Okay. And there's some horizontal stuff up here too. Okay, if we go back, $99.71. This is a big level back in 2010, December of 2010. It was really, you know, before you made your massive, you know, kind of flee towards Swiss francs. That's, you know, really what provoked the SNB to put the cap, you know, the floor at 120, and they let it go. Okay, but that's up at 100.65, so you're getting really close. You have the year open just a few ticks above yesterday's high as well. But, you know, again, on this longer term stuff, what I think the really big picture is going to be is probably between 100.40 and 100.65, and that would fit pretty well, wouldn't it, with maybe euro, you know, dipping down into channels that we talked about in the special report, which is 107 and change. Okay, before it goes, or before it tries to go higher again. You know, I can't stress enough the next two moves on euro for me, higher more or less here, and then lower from 109.75 to 77. There's this too. Okay. here. Wesley asked, what about hourly charts? The hourly chart. Well, further down you go, the let's see. So I'll do my best here for you on an hourly chart of dollar Swiss. Let's start with this one here. That one's actually interesting because that might actually get you up into resistance that we talked about. So you have a median line here down about 98.50, which could be support, but I think probably what you're more interested in is going to be this right here. Which, you know, the market has not been that all that exciting on a short-term basis, although it looks like that's starting to change. Okay, so this could be an interesting thing to work with, Wesley, and anyone else out there. All right, so you see this slope here that we're looking at. So I'll get rid of this one to get rid of confusion. But all right, so here's your lower parallel. Okay, this is the 25% line, 50, 75, upper parallel. Okay, you had resistance on 75, you had support on the 25, you had support on the median line. I would watch for resistance pretty much right there. So slightly higher than where we are right now. Market comes down into here, I'd watch for support again on the median line. All right, so essentially, and it doesn't have to be at, it might be a higher level because as time passes, these things slope up, right? So the market support is going to be higher. Okay, but essentially you're looking at resistance here. You're looking at support on the median line, which is where you found support. It could be a little higher. You want to draw this across, okay? You can see where you have all these touches here as well. Right? So it might be closer to 98.80. Essentially, you're looking between those two lines, though. So in this case, that looks like it's about, 98.70 to 98.90. So that's your support for $, Swiss. 98.70 to 98.90. Okay, which again is just kind of brackets the high that you had here in late August, doesn't it? Right here, this level. So you get a dip into here potentially. Again, watch this for resistance. That was resistance before. Okay, it's just a couple pips higher than where we are right now. It's like at 99.45 or something. We're at 99.36. So you might see resistance right about there. You can get a little dip here into this area. Maybe by tomorrow or Friday, and then market can feel free to head higher again. And you might end up getting a top on this structure because I think it actually lines up really well with, it does line up really well, doesn't it, with these long-term parallels that go back to 1985. So that's what I'd be looking at. Yeah. Yeah, so Wesley, yeah, so 96.80, 96.90 or so exactly. Yeah. And it is the best when you get a, when you get a horizontal level like this, September 1st high, which lines up so well with, with the slope level that's been in play, right? This has been in play now for some time. So if you come back into it, it was resistance before, support, pretty confident that it's going to provide or be able to provide support, again. Okay. So I hope that helps. Looks like we've got a little late day sell-off here for the S&P 500. Pay attention to Euro-Yen, folks, as we are coming in now from resistance. We started the webinar right here. We're coming in. Watch that 113.65 area. The month open price, the trend line, former trend line just broken. I'd pay close attention to that. And pound yen as well, sitting right at resistance. And I would probably be watching again, this 127, 20, 30 area for pound yen. Those are two of the things that I'm really following closely, for the next move. Dollar yen, the high volume level, 104.25. Okay. All right. So I'm going to wrap it up here. I will get this archived and then get back out into the charts so that I can write the update for tonight. All right. So thanks so much for attending. Everyone have a great rest of your week. Take care. Talk to you later. Bye.